Hello, good afternoon, class. Today we'll be looking at accounting process. My name is Ogunribo Kumbamidele Emmanuel. I'll be your instructor for this section. So we'll be talking about accounting process. I want to share my screen so that you see what we'll be looking at. So what we'll be looking at dealing with, we'll start from accounting process, and from there we'll look at some things so that will take us. So let's start with, I'll talk about accounting process. Accounting process is one of the major components in accounting that we need to note as something that is very fundamental. So when we talk about accounting process talks about the stages in which accounting transactions are recorded. We start from what we call the business transaction, where you have all the source documents, the journal entry, general ledger, the trial balance, and the final account. All these processes are what we would consider when we are talking about accounting process. So I want us to consider these as we move ahead. If there's any question, I want you to draw my attention. Now, let's start with the first one, which is the source document. And I want you to also please follow what we have in the manual, which I've sent to you electronically in order to go on with our classes. And please, at the end of the class, the video will be available, the link which you can watch as often time in order for you to get what you're doing. Now, what we need to look at when we look at accounting process is very simple. We said that it's a sequential way in which we record our transactions. And I want us not to get to put this into issues when we are working. So let's look at this. The first thing we are looking at is the business transaction, and which I said is talking about the source document. So what are the source documents that are available in businesses? You can see all those source documents as it's being done here to perform the day-to-day transactions and all the way transactions are being done. Examples of all source documents is what we have here. We're going to discuss them one by one. We have the general word, which is the invoice, which has been subdivided into sales invoice and purchase invoice. We also have the credit note, the debit note, the payment voucher, bill payable, the bank paying slip, check counter for, the receipt, the bank statement, store invoice, store issue voucher, and other ones that we have as the purchase order and the transactions as they have. Now, the first one, like what I explained earlier, that we have invoice. I'll talk about invoice is a source document that shows the documentary evidence of transactions in terms of their unit, quantity, and sizes. Now, when we look at the first aspect of it, we talk about sales invoice. It serves as a source document to record sales, serve as a source document to record into our sales daybook, which we are going to elaborate later. Another name for daybook, which is generally referred to as journal. So when we talk about invoice, we said it shows all information about what is to be transacted in terms of goods, in terms of the name, the date of the transaction, the unit price, total amount, and whatever information, including the value added tax, as you've seen displayed on our screen. Now, for the sales invoice, it is when goods is being sold, either the seller issued this to the buyer. So, and on the other hand, the purchase invoice, you get to see that that is what the buyer collects and they record. So just like in invoice, in the hands of the issued by the seller, it's called sales, but in the hands of the buyer, it's called purchases. I can see example of what we have here. You can see all the name, what I gave to you. Now, this is a sample, but they have variation. We also talk about credit notes. A credit note is a document that relates to goods returned by the buyer or for a refund to him. So when you have a situation where a buyer has been overcharged or there's any damage in any goods, a credit note will be issued. So when it comes next time, you'll be able to utilize it. We also have information about what we call the debit note. We also see a debit note on the other way. It's also transaction that item whereby is issued. Like for example, if the buyer has been overstated, he can issue a debit note to tell the seller that this is what you are owing him. Then we have what we call the payment voucher. The payment voucher is used by an organization in order to show how expenses is being done. You can see for services rendered, and the voucher is being checked for authorization. Where you can see example, this is an example of an organization voucher, and you can see all the information there in the details, the date, and then you have the authorization. In your manual, you see it clearly. Then we also have what we call paying slip. This is what is used in the bank. A lot of you always call it teller. It's not called teller, it's called the paying slip. You can see this is an example of First Bank, and it's also evolving where you have the unit and the amount that you want to pay. Also for check processes, you have them, all that is done. These are source documents that we use. We also have what we call the counter for, that is the check that is used. When check is issued, you will see that there's something that is left in the check in order to record transaction. We have the receipt, which is for evidence, and this receipt is to show the evidence of cash receipt. This is an example of receipt for a company where you can see when people pay, this is a receipt for this entity. And receipt can be in any form. We also have electronic receipt now. If you go to any organization whereby you buy, maybe from eatery, you see they give you a receipt. Then we also have bank statement. This is something that you are used to. Now, bank statement before have to be something that is being printed, but you're having it electronically, which shows how money comes into business, into a bank account of the customer, and how the bank have issued it. We are going to talk more about this when we get to bank reconciliation. We have the store issue voucher that is used in the store, the bill, the purchase order, all these you'll see as we move ahead. When we get to the transaction of inventory IS2 in later modules, we are going to really dwell more on this. The bin card is used for recording movement of transactions in and out of the business. And then we now have to move to the bottom line. When we talk about accounting process, before we move to the books of account, there are major things that we have to see is that the underlying factor for accounting process is what we refer to as the double entry. And the double entry principle states that for every debit entry, there must be a corresponding credit entry. Now, one thing I want us to note in this class, we are going to be adopting what we call the accounting matrix design. A lot of people have, I want you to get to have this. Right from secondary school days, you hear people that will say debit the receiver and credit the giver. Now, this assumption is outdated. So, and because it's limited, so I'm going to introduce you to a new concept that's called the accounting matrix design, and it's based on what we have in the element of financial statement. We all know from what we did in previous class about the definition of financial statement elements. We have assets, expenses, liability, income, and capital. So I have decided to bring these out to now, but that when we are talking about double entry, we are saying that there's two sides that we call the debit and the credit. And I want you to have this at the back of our mind. Please note that there's nothing called debit the receiver and credit the giver. So we'll identify the items. You can see all what falls in as assets. The rule says that when those items are increasing, the rule says we debit. When those items are decreasing, the rule says we should credit. Do we get that? Some other fundamental things I want us to look at is also very, very germane is the element of what we have here, and I want us to get to see it. Please don't let us put them into much adult. And you can see as we move into all these so that we can see we have debit and credit. You will see that the concept which I explained here when I say debit and credit, please know debit and credit is a general term used in placing transactions in accounting. So now we have the five elements we have done in the previous classes to the assets, expenses, liability, income, and capital. So what we need to do is now to know how to place them. We have the increase. When asset is increasing, the rule says we should debit. When this item of assets is reducing, the theory says we should credit. Now we also have it for expenses. When expenses is increasing, we debit. Now these are the expenses. You can have repairs, electricity, and anything we are paying. You can also talk about salary paid. We are talking about rent. We can also talk about rate paid. We can also look at any other expenses that we know, things that we use on a regular basis. When we talk about regular things like repairs, maintenance, those are expenses. But when you talk about acquiring building, you get to see that if you look at repairs, repairs is an expenses like what I've said here. Then we look at liability. Liability is talking about what you owe someone that you have to pay back. The liability can be non-current liability that is more than 1 year in terms of duration, and current liability to be liability that is due within 1 year. Now we now have income. Income talks about what organization receive, like you talk about sales, commission received, rent received. Why we talk about the last element of the financial statement, which is the owner's equity. Now you can see this is what I also shared on your manual. So you're going to see how we're going to put this into use. How do we use accounting matrix? Accounting matrix is something that underlines the way accounting transactions are done. Even when you get to the computerized way of recording transactions in accounting, we also have to make use of this. Now, like what I've said earlier, I've explained this and I've given you all those fundamentals. So what we are going to do now is to see some examples. For example, here we are told, bought motor vehicle. Now you are told that bought motor vehicle. Let's break this down. Bought motor vehicle. For what? For, you can see the transaction there, for 5 million by check. 5 million by check. Now let's now look at all these. As we have said it, we have looked at all this. So what we are going to do is that in accounting, transactions should be broken down into two. And I want to bring back here that when you talk about accounting, anytime we talk about transactions in accounting, is basically divided into two. There are two sides, in which I talk about one, you have the debit side, then we have the credit side. The debit side is referred to as the left hand side. The credit side is referred to as well called the right hand side. Like the way when we are matching, we make sure that when we are recording, we record the debit side first, because the debit side, which is left hand side before the right hand side, which will be the corresponding entry. And please, when you are given any transaction in accounting, when you have any transactions in accounting, we have to see what are the two components. Like what I said earlier, that one we say acquire motor, acquire motor van paid by cash. Let's draw this up. When you talk about motor van, you can see we can break this into two: motor van and cash. So we have broken this to two. Now the first thing we need to now go back from the matrix that we have. Motor van is an example of what? Assets. So we have that asset. Cash is also an example of assets. So we also have that as assets. Now let's now bring in the rule. When motor van is acquired, it means you are having more motor van, is increasing. Then what happened to your value of cash? Your value of cash will decrease. So we can bring in our matrix now from what we have done earlier, and I'll quickly just do this so that we can all be on the same page. When we go to the matrix, the rule says when assets increase, we debit. So we'll go to where motor van is, we debit. And we're told when asset reduces, what does it say? We credit. We quickly go back there, we credit. From there, we'll get to see that the double entry principle has been fulfilled, which says for every debit entry, there must be a corresponding credit entry. Now, that likewise I've also done here. You can see in this one too, we said paid wages by cash. So looking at wages by cash, you can see that wages is an expenses is increasing. And when expenses increase, when an expense increase, through sales we debit. Remember our matrix? Debit. Then we have our cash. Our cash is an asset. When our cash what reduces, what does the rule say we should do? We should credit. We should credit. Now let's quickly reiterate on what we have been taught earlier about all the fundamentals. We are saying that let's go back because the matrix is going to be the fundamental thing that we'll look at. We said when asset increases, what do? We debit. We debit. I'm repeating. When our asset is increasing, the rule says we debit. What happens when our asset is reducing? The rule says the rule says we credit. Now, when we move to the other point, when we talk about our when we talk about our what expenses. When expenses is increasing, the rule says we debit. But when expenses is reducing, the rule says we credit. Now you can see we are not using debit the receiver or credit the giver. So those are the things that we need to put at the back of our mind. When liability increases, we credit. When liability increases, we credit. When liability reduces, what do? We debit. Now, when we talk about liability decreasing, we debit. When income increases, we credit. When income decreases, we debit. Now, all these we also have when our owner's contribution increases, capital increases, we credit. When it reduces, we debit. Now, having looked at this, we can now look at all the other examples that we have. Then we can see that this is already giving us all our information and we can see how this also done. Now, this also we also have for this as we move ahead. When we get to a place, we're going to look at this. I've explained in terms of assets and liability. Now, all this also ensures our transactions, the storyline that I put there to make us have this. This illustration I've done earlier, I said you can see here two accounts involved. Adeolu acquired purchased motor van and cash. You can see motor van and cash. Now, what we need to know is that motor van is an asset, is increasing with debit, and then with credit cash, which is reducing. Now, same thing we also did here. If you look at Adeolu's record, you can see here we're told that Adeolu, are you there now? Sold goods. Adeolu sold goods. What did he say? Adeolu shaking you sold goods. 500,000. Are you there? So in this case, there are two accounts there. Sales. Are we there? Sold goods 500 on credit. In this case, this Shola will not be our receivable. And you can see receivable is an asset. So because it's also increasing, we'll go back to our matrix. If you can remember, what does it say? As an asset with debit. With debit. So that is what we're going to do with debit. Now, having been able to look at all these, we can now go back to our records. Remember when we started, we said the accounting process is all about moving from the world, from the stages. So we've been able to achieve this accounting to the source document, we are moving to the journal entry. So how do we record all these transactions? The rules say the transactions must be recorded in the books. So the first book we are going to consider is the journal. Now, note very well that journal is a book, are we there now, or prime entry, or subsidiary book in which we record all transactions. First book of record. The need for journal is very simple. They record total transaction in one place so that you don't just start moving from one place to another. And main book of originality, we have the general journal, the cash book, the petty cash. So in this module, we are going to look at general journal. So when we move to the next topic, In next module, we'll be looking at the cash book. So let's see the journal. The general journal is very simple, in which you have the date, you have the account to be debited, and a brief narration. So from here now, what are the uses of journal? This is very important as we move to higher classes. When talking about journal, it's used for opening and closing entry, transfer from one account to the other, purchase and sales of non-current assets, and end of or period adjustment. You would have done this in your earlier class in year one, in bed 111 and 121 and other prerequisites. But this, you can now see errors and correction. So when you talk about journal, this is the format for journal. You can see this is it. If I want to draw up something, so this is how journal looks like. So you can have the folio, okay? So I can see the narration. So this is how you can get journal done. And then you have the date. Don't let us forget our date. You have the date, month, and year. And that is it. And when you look at the record, the name of the account to be debited will come first. Then your narration. Normally, narration will be so, and that is what we have. Now, if you look at this, you can decide to put this one into journal. Don't forget, when it comes to journal, one thing we need to also do, we need to write the name. What is the name of this account? We need to write the name of the account holder. So this one is for Ade Olu Enterprises. Ade Olu Enterprises. So when we talk about Ade Olu Enterprises, we have the journal. In our journal, we're going to have the date, we have a particular, we have the account to be debited, the account to be credited, the currency in naira, then also have the folio for referencing purpose. Now, what is the date? No date for this information, but we can assume the date we have. So, what are the two things we have? Sold goods. Sales. I was told sold to Ishola and Co, which we have done earlier. Sales is an income. And when an income increases, don't forget, is an income. When an income increases, the rule says credit. Why Shola and Co that we sold to on credit is a receivable. Is a receivable. When the receivable increases, what does the rule say we do with debit? So we are fully done with them. We just done the Shola and Co now with debit. Here we debit the amount 500,000. Then what is it? Sales count. We do what? We credit 500,000. What's the narration? Being sales on credit to Shola. So we close it. This we don't have any ledger. Now that same thing we also do. Now don't also forget that we said that we also use journal in order for us to get our opening capital. From what we have been taught in our previous class, we all know the word capital is total assets, bringing the remainder to you, minus total liabilities equals to capital. So in this case, we can look at this. If I want to use my journal for that, what do? I come here, what's the name of the company? Here we say Ademi. So here we have Ademi. Then we have journal. In our journal here, the aim here is to use it to determine our capital. So we have debit and credit. We will record all the assets first. We have cash in hand, in hand. How much? 66,000. We have cash bank. Cash at bank is 366,000. What else do we have? We also have inventory. inventory, which is 375,000. Then we equally have furniture and fittings. And furniture and fittings is 180,000. Then we have our payables. Don't let us forget, payable is a liability. So it will be on the other side. Our payable is 150,000. So at the end of the day, we to now what value to make up the account. Then we draw it up here. So our balancing figure will now be our asset. So let's get the figures add up together. Here we'll now have to add all of our calculator. That we use the one on the system or we just push the one in our pop-up hand. 60 plus 66 plus 366 plus 375 plus 180. So that gives us 987,000. So we deduct the payable minus 150,000. Whatever we have left is going to be our capital, 807,000. Now, this is one of the basic computation when you are faced with accounting. This is what you get to see, the opening entry for capital. And you get to see this is an advanced level of what has been done in the previous class, prerequisite class before coming to financial accounts, which you see in your basic bookkeeping and record. And that you can see the answer here, which I have done. Now we also have it here. We can also use this to move from one account to the other. So where you have balance brought forward, and you can use this to move from one account to the other. So all these are what we get to see when we look at it in record. Now we also have illustration. Like for this, we have all these to do about transaction. And what I've done is I will explain it to let's see. Now for this, a machine bought credit from Jerry. The question we need to answer, what two accounts involved? Machine is an asset. So the rule says the asset is increasing. When the asset increases, what do we do? We debit. Jerry, we said from Jerry on credit. When you are buying from anybody, it means you are owing, and that is payable. The rule says you what? You credit. Is a debt. You are crediting. Now, motor vehicle is also an asset. It's increasing. So when an asset increases, what does the rule say? Remember, going back to our matrix, we debit. You can see sold to general credit. This person is something we have sold to is a receivable. And that is a what? A sales because we are selling. So we can't call this. So yeah, now a motor vehicle sold. Sold to Jeje Lola. So Jeje Lola is what? We sold. Then this is when we are looking at don't is our vehicle. When we are selling vehicle, fully is not going to be the main point of asset. Rather, we are making what? Sales. So we have to come here that no time I will see the word vehicle we think is asset. But yeah, this business is the business of selling. So what you are having is sales. So what we are need to put at the back of our mind is now that we are having what? We are having sales. So what are we having? We are having sales. So we're having sales and he's selling to this person on credit, which is receivables. So sales increases by crediting, receivable increases by debiting. Quick one. But the effect of all this, the word debtor now, remember, from the previous class is also called receivables. And it offer motor vehicle in full settlement. So the person who is debtor, he offers motor and the offer was accepted. It means that we are getting the motor vehicle as an asset. Then, as an asset, motor vehicle, motor car as an asset, it means the guy who is owing us bobo, the receivable will be reducing. Now, I want you to just sit back. 1 minute, look at this. Ilem Bayo, a creditor. Are you there? Business. Take over by prospect. Yeah, I'll give you 2 minutes. Just look at it. It's now paid. It's now to pay. To be paid. What do you do? What comes to your mind? Okay. I believe that 1 minute we'll be able to look at it. And it's very simple. In the money is somebody who are owing, they're going to pay who is coming down, so we have it. And the prospect business, are you there now? Will be what? Credit that you are no more owing anybody. So that's what we have. Now, of this, we are going to look at this example. After that, we'll quickly go to ledger. Let's quickly look at this example, then we'll put it to answer. I didn't even start a business with 300,000. I deposited from here. When talk about starting this example, what comes to your mind? The word capital, right there, and the money was deposited in the bank. Now let's see, bank is an asset. The rule says when bank is increasing, we debit. Capital is increasing credits. And that gives us 300,000. Same thing, we move to this next question. Motor van I check. Motor van is an asset. So we debit motor van. And credit first and credit our bank because there's nothing called check account. Same thing, we have goods. 5,000 by check. And looking at an expenses, purchase it and credit our bank. What do we do here to sales? Go back to our market and also our bank. So what do we do? We credit our sales account and we debit our bank. You see that it's different from what we have done up here. Here, the bank is 15,000 out from Ozone. We are buying which is an asset. Debit on your account. And Ozone is somebody we are buying from, which is a supplier. What do? We credit Ozone. Payment of rent. What do we do here? Rent is to be paid. What do? Debit rent as an expensive and credit bank. Don't forget about that because check is used in the bank. Yeah, Ozone. Who is Ozone? If you go back up, July 10, Ozone is the supplier that we are owing. Paying Ozone now means that our debt is going down with debit Ozone. Somebody we are owing. And what happens to the money in our bank? It will go down. Bank will reduce credit. We draw 5,000 for personal use. And this is what we have. Debit, what? What? Hmm? What? The debit the price of this entity. And credit, because it's personal use. In account is personal use. But what you have been taught in early class, and I'll bring it up again, it's called drawings. And if you look at all these, is all what we have extracted. But don't forget, the examiner said, draw up the general journal for transaction. So if you have to draw the general journal, that will require some other fundamentals. So let's look at that. Now, what's the name of the owner of the business? Do you hear me? So have it here. Do you hear me? Thank you. So we draw up the journal. You can see in this question, all the information that we need are present. So we have here the debit, we have here the credit, we have the date, and we have the what? The particular. Okay. Let's see the first date. We have already drawn all this. We just move on. July 1. For July 1, what are the two accounts involved? Bank and capital. So bank is debited with the first reference, bank account. Then we have capital account. What is the amount involved? We have 300,000 naira. Don't forget our currency here, 300,000 naira. So we have this one narration being capital to start business. Okay, are we moving? Now, what's the next date? What's the next date? July. For July 12th, what are the two accounts we have? Motor bank and check. So motor bank debited, so we have motor bank account, then we can't write bank. What is the amount involved? 20,000. So what that is? Being what? Motor van acquired. So let's move to the next information that we have. We have July 5. Let's say July 5. What's the account that we have? We have purchasing and bank. So debit purchasing and then credit bank. Don't forget you are already used to the narration. So I want you to narrate and give me your own thought. So what's the amount? 5,000 naira. I can see I'm just developing what we have done earlier. What's the next date? July 8th. July 8th, what are the two accounts? Source and bank. So what do I have? Debit bank from what you give me there and sales account. Don't forget bank and sales. That's what we're doing it. Bank and sales. That's 25,000 naira. Next, what do I have? We have July 10th. July 10th. And Ozone Limited. So, Monitor as an asset will be debited and Ozone account will be credited. So, what's the amount? We have it to be 15,000. So, let's take another journal to accommodate others. Okay, so we can move. We now have 3 more to go. July 15th. So, we have July 15th. What are the two accounts involved in July 15th? Rent and check. So, we have rent and we don't have to write check or write bank. What's the amount involved? The amount involved is 2,000. So we have 2,000. Then what's the next thing we have? July 20. July. What are the two accounts involved in July 20? Ozone and check. Ozone is somebody we are owing before, so we are going to pay. Ozone account. For there's our payable. Now we are paying from our bank account will be what? Credited. So let's see what do I have. That is 8,000. We have 8,000, 8,000. Now let's go on with the next fundamental that we have. July 21. That is it. So July 21. What are the two accounts involved? We have drawings and bank. Drawings and bank. So from here, we do 5,000 for personal use. You can see now. I always tell you, what happened? I remove money from bank. And then we have to debit drawings because drawings are expensive. And that was something I want to pay attention with the rule, we always be the rule. Then we credit amount is removed, we have it to be 5,000. Now, this is our journal. Like what I've said, I want you to put the narration and that be a complete stamp. Now, moving forward, like what we have done, we have to look at the ledger. Now, from all what we have done in the journal is a prerequisite for the ledger. And note very well, ledger is maintained for individual accounts in which we are able to derive all balances in the ledger, and then we'll be able to prepare what we call a trial balance. Now, when we talk about ledger, types of account, you have the real account, the personal account, as you have said. These three main accounts, they guide the way we prepare records. You can see the real account talks about those things you can see, you can feel. Personal talks about individual like names, somebody, partnership, and nominal account. You can see it for our expenses to open like gain or losses. Now, what are those things? You also have the ledger, sales ledger, other ledgers, and general ledger. But for this class, we'll be dwelling on how account of ledger is done, which you have something like a T format. So you have the name of the account, name of the account up. You have also the debit side, the credit side, and this. So that is what we're looking at when we talk about the ledger. Now, in looking at this thing, I want us to be very careful when it comes to closing up ledger. Please, ledger is very important. And when you are closing it up, you must be able to know how to close up. For example, let me take this today. For example, my bank. And I have an amount on this side. Maybe this is given to me by my employer, which is federal government. Federal government is giving me my salary, 100 billion. Wow. I'm sure we all want to end that. And I decided to give my wife 80 billion to marriage. So the question that we need to look at when we are closing of ledger is very simple. And want to close of ledger is like when we are looking at a scale. If you look at a scale like this, you have this, which is on the left hand side and on the right hand side. Now, if you have something here to be 5 kg and here to be 3 kg, it means you need to increase this. In accounting, we don't decrease. We look for what to balance up. So this is 100 on this one. Here is it. So this is better. This is not for comparison. So whatever will be called balance right now, make sure it makes up to this 100 and the amount is 20. So what I'm going to do at the end will be called balance brought down of 20. So any value that's on this side will be brought down here. That is called balance brought down. Looking at this is on the side. So we refer to this as what we call debit balance. We refer to this as what we call debit balance. So because we have balance the debit side, so this is referred to as what we call debit balance. So this letter is having a debit balance. Let's turn to the other side. This is, for example, somebody that I'm owing. And from that example, we have Ozone account. I'm owing Ozone. I bought from Ozone. Like what we said earlier, I bought something from Ozone. Purchase 50 billion. And I said, oh, madam, I'm going to pay you. I paid Ozone 30 billion. No, I don't want to pay million. Don't do too much. So let's look at it. This way. This transaction paid 40 billion. Now let's look at it from the scale. If you look at it on this scale, this side is greater, which is 50, and this is 40. It means for the balancing figure. The balancing figure here, which is going to be the balance carried down, is 10. So I can write 40 here, but the rule is that the account must balance. So in looking at that, by means of comparison, what will be here would be what? 50. So I haven't written 50 here, here is 10. Now the balance brought down will be brought here, we'll call it balance brought down. That is 10. Because the balance brought down is on the right hand side, we refer to this as what we call credit balance. Now, all this is what I'm going to use to approach. I've explained it here. But the same thing we did here. You remember these are the Adeyemi? But in this time around, we are going to turn this are the Adeyemi to what? To ledger. And after that, we'll be able to look at the trial balance. And then we'll look at the recording as how to be done. Then we'll look at this quiz. And we should be able to end the class. Now, let's quickly look at this. And you see we are almost there. We'll turn this to ledger. Remember what we have done here, so that we don't need to start repeating all what we have done here in the journal. If you can do something, I'll give you like 1 minute, 30 seconds. Screenshot this. Because we are going to screenshot this, we'll now use it to do our ledger. I believe you would have screenshotted. So, screenshot. Haven't grabbed this. Also, grab this. We are not going to turn all this to ledger for us to be able to prepare our trial balance. Thank you. I believe you would have done that. Okay, like what I said, this video, when you watch and you have any issue, you can call me in my office. You call my office as we schedule the time to have the phase validity of any question. Now, having done that, all those transactions we have done, we already have it. So I believe you have item with you. So and don't forget, I'm going to draw later these transactions as they occur. So the first transaction talks about business capital and bank. Don't forget capital and bank. So bank is credited, capital is credited. Now let's quickly look at it. The rules of the bank. So be very careful. You are preparing journal. You will see now in the ledger, I'm going to bring it out from his own record. So when you are asked habits, from what you have said earlier, you don't want to assume what you've been taught in your basic class. Now, debit is to pay on the left hand side, while credit will be on the right hand side. So if you are told bank, I go to my bank account where I have bank, I write value on the debit. Then whatever is the corresponding, if it's capital, will be in front of that value. So let's do that. I've reminded you that. So I have bank, so I have account ledger first, which I've done. Then I have my capital account ledger. Next year, and I will still have to do a lot of ledger. So let me prepare my table. Let me prepare everything I'm doing. So I have that. So that when I get there, I don't start repeating. So I have for bank. So the rule says I should debit bank, and I have it. Do like one. So I have first of July, the currency, and what do I have? Yeah, so in this case, you are debiting. So if I'm debiting, what is the amount? 300,000. What is the value? Yeah, 300,000. The corresponding entry there is capital. Corresponding entry is capital. While when we get to capital, the rule is we are crediting capital 300,000. 1st of July, the corresponding entry is what? Bank. July 4th, we have motor bank and check. Remember, from the will be debited, bank check is used as bank, it will be credited. So we already have bank account. We want to do more, but we don't have motor van. So we open the next ledger for motor van. Now, and the rule is that we are debiting. What's the date? The date is what? July 4th. Amount, we are selling at 20,000 naira. So go to our bank 7th of July and then how much? 20,000. Corresponding entry, motor van. Okay, let's look at the next one. Having looked at that, we have purchases and check. That is, don't forget, we have it as purchases, expense to the debit card, bank is used for cash, is to be credited. So what do? I have to come here, I have my word purchases. Purchases account. So I think, what do I have? Purchases account. The rule says the debit purchases. What is the date? Give me the date. We have July 5. And what is the amount? The amount is 5,000. So we now have bank. Then we move here, 5th June. What is the amount? Can somebody give me the value, please? Okay, 5,000. Then value again. Then we have purchases. Have a look at that. What is the next item that we have? So yeah, we're talking about sales and we're talking about bank. For my journal, sales is to be credited, bank to be debited. We have the bank account already. So what we need to open now is the sales account. There's our sales ledger. We have ledger. So I have to open all the ledger. So for my sales now, what do I have? The sales is 25,000. So I debit my bank account. I need the date, July 8th. And what is the amount for the sale? That is 25,000. Yeah. Then go to sales account for the July 8th. The amount is 25,000. Corresponding entry of bank. Now let's move to the next item. Acquire furniture for credit from Ozone. So furniture is an asset. Remember from what we said with debit. Ozone is a payable, somebody we are owing with credit. So we'll go there. We don't have furniture or that, so we are opening the two accounts. Fresh furniture account and Ozone Limited. So we open these accounts. So what do I do? Furniture accounts will be debited. Don't forget our currencies are very important. So what do? Move to what? July 10, 15,000. 10th of July, 15,000. Then we have July 10. We have 15,000. Then we have furniture. Are we together? Now we also have the fundamental one. What's the next one? Paid for rent. Rent and this, remember, rent expenses in debit, bank is credited. So what do? I don't have rent account, so I open rent ledger. And what's the date? The date we have is July 15th. So we have 15th of July. And what's the amount? We have the amount to be 2,000. So it goes to our bank, 2,000. Corresponding entry of the bank will be credited 10th of July, 2,000. They want rent. Is that all? No. July 20, we paid Ozone. Are you there? So, we paying Ozone means that our debt with those which are reducing and our money in the bank is reducing. Don't let us forget that bank as an asset when it reduces. So I think we have both ozone and bank. So let's go to where we are owing ozone. Oh, ozone, we just come and say on the 20th, 8,000 we are paying ozone. 20th of July, 8,000 we are paying ozone bank. So when I go to the bank, 20, so now come ozone that way. How much? 8,000. Now let's go to the next fundamental. We do what? 5,000 for personal use. And the money in our bank will go down to credit bank and debit coin. So we have our bank July 21, 1st of July, 5,000, and we have let's not go that far. Let's put our drawings. So we have it here, 21 July, that's 5,000, and that is bank. Now all what we have done now, able to achieve is we have put all the information in the ledger. So what do we need to do? Let's how we have been told earlier how to close our ledgers. So let's take these ones that are very simple. These on the 5,000 balance item 5,000. Meaning having the balance brought down 5,000 here, and this drawing is the debit balance. Let's say we have here balance tie down of 30,000, 300,000, which come here balance brought down, and my capital is having a credit balance. Motor van balance tie down that is 20,000. Oh, and this shows that I'm having a debit balance of 20,000. Oh, balance tie down 5,000, which comes here purchases and one a debit balance of what? 5,000. 25,000. Yeah, yeah, yeah. Balance tie down. So in the opposite side of sales, this shows that my sales having a credit balance. Balance tie down 10,000. It shows that my furniture is having a debit balance. Oh, we come to ozone that we are owing. We are owing ozone 15,000. Let's confirm again from furniture to ozone. We are owing ozone 15,000. So that we don't make mistake when we are reading. Let's look at it well written out. This is again. The amount here is 10,000. Now this is 15,000, 15,000. The balance here will be 7,000. Meaning that ozone is having a debit balance of how much? 7. No, it's not a debit because the balance brought down is on the credit side. So it's a credit balance. Are we there? So we come here, balance carry down 2,000, which will now come here and balance brought down of 2,000. Now we are left with one of the items, and I purposely left that so that we can compute it. Let's look at this. For now, 305,000. Now let's we are gotten that. Let's talk about the addition. All the addition 20,000 plus 5,000 plus 2,000 plus 8,000 plus 5,000 is 40. So 40,000, all the addition here is 40,000. So deduct the 40 from 325. 325,000. It means I have 5,000. Don't forget that 325 minus 40. So what do I have? 325 minus 40,000 is going to give me 285,000. Meaning I'm having 205,000. 385,000. So coming to the end of it, you can see we are now to look at what we call the trial balance. And the trial balance is just simple. It's the summary of all the balances from the ledger. And with what aim? In order for us to be able to determine the arithmetic accuracy. Are we there? So all the balances on the debit side. We have the debit side, credit side, and it's just a list of all those items, all the balances. Traditionally, assets should be debited, expenses should be debited, capital should be credited, don't forget our currencies. Then income should be credited. Then we also have our liabilities should be credited. Whatever you have there, and this is how we know that all our transactions are correct. So solution to what we have on what we have done all the transactions here. So let's see. I'm drawing towards the distance of the for the month of July. So we have our debit, we have our credit. So let's have it done like that. So fundamentally, we have Naira. So the first account we're going to have, which is our ledger. We'll go back there, let's look at it. Our ledger, which is our account, is having debit balance of 285,000. So I take it to the debit side, 285,000. That's the first one. What's the first item that one item? It's on is on the credit balance. So all right, capital, the value goes to the credit side. That's 300,000. Next, what do we have? We have auto van. Motor van is 20,000 debit component. So we'll bring it motor van 20,000. Next, what do I have? We have what we call drawings is on the debit side. We take our drawings, we also record drawings into the drawings. 5,000. Don't forget, we said the balance is what? The list of all the ledger balances in order to check for arithmetic accuracy. Purchases is a debit balance of 5,000. So bring it here for purchases. 5,000. Then after that, we also have what? Which has the credit balance 25,000 go to the credit sales. Credit side is 25,000. Next, we move to the next one. We have our what? Furniture, 15,000. Our furniture comes there. 15,000. Next, what I have? I have zone, which is payable 7,000 on the debit side. Sorry? 7,000 on the credit side. Don't forget, we don't consider the balance carried out. We consider the balance brought down. Rent, which is the last item, we go to the debit side. What's our rent? Rent is 2,000. So we can pick our calculator and let's confirm if we are having arithmetic accuracy. So can somebody help me punch your calculator at this point? I won't just give value. I want you to press the calculator. 300 plus 25 plus 7 will give me 332,000. What's the next one? Let's confirm that to 285 plus 20,000 plus 5,000 plus 5,000 plus 15,000 plus 2,000. That will also give me 332,000. Now, that is what we need to look at. Now, if you look at all these that we have done, they are all manually prepared, which means that we can also have them being done computerized. And accounting can also be done in a computer base. So we'll be seeing more of that in the next module. But let's quickly just do a recap of everything that we have done. So we look at the accounting process, where we said that the accounting process has to do with what? With the record. And like what I promised you, I said you'll be able to have this material. We equally send it to you as a PDF for you to read. Now we look at all these in terms of accounting process. And that takes us to, we stop with what? Trial balance. Now, what we are going to look at is to look at how these records and the transactions as what we have can also be done in this. Okay, there's something that we need to look at. Sorry, class. Let me see. Window off. Let's see. So we have to look at these examples. So let's see all these examples, questions that we have looked at so that it will take us and then we'll wrap it up for the class. Now let's have this. This quiz, end of quiz class is what I call it. For example, one. They're told the double was that one. Every dash entry must have a corresponding one. Which answer is correct? A. Debit, or credit, credit. If you look at it, that is option C. Option C. Are we together? For every debit entry, there must be a corresponding what? The corresponding credit entry. The corresponding credit entry. Now, one of the following is recorded as a book of original entry. If we go back to the class note, we have it. It's called what? And let's say again, for every debit entry, there must be a corresponding entry. This principle represents what? Generalization, ledger, prime, all correct. You can have it a double entry. Now, we also have narration is what? As used in accounting entry is commonly found in where? Statement of which of journal. We discussed that earlier. Now, which of the following is not part of the double entry? So if you are required to look at which of these following is not part of double entry, like when we look at earlier, you can see as you we have two sides, bank income statement, just the one looking more into which of these is not part of double entry. I've also seen that which I told you earlier is also the issue of statement of position. It's not a double entry item, it's just a statement at the end. Which of the following is designed to prove the accuracy of double entry principle? Calm down. You can also quickly go on your notes. Did that earlier. Score trial balance. Then we also have this synthesizing. When we look at it, when we talk about this, it's very simple. Synthesizing is what? Manage application from which journal is not intended. As some transaction that we say journal is not intended. Number one, you can see this one, you can take the dot. Correction of error, we say we are using it. Recording of non-current asset, we are using it, but there's nothing that mention recording of credit discount. Which goods are taken by the owner of a business for personal use? The accounting entry, when you say when goods are taken by the owner of a business for personal use, we have underlined that when we're doing our example. We talk about drawing. And that is where we talk about debit drawings and credit inventory. Now that word inventory, yeah. Then bookkeeping in the field of accounting. is the first phase of accounting, the recording, classifying, and that. So this is what in order to check the ability of your lower class. That is the answer is recording. So that is A. Now let's see any other question. Yes, we still have one more. The ledger of who of Ademola receivable has a total debit of 25,000 and credit of 20,000. The sales ledger will now have what balance? Quick, quick. You quickly drop a ledger here. This is for Ademola. He has a total debit on which side 25,000 and on the credit side he has 20,000. So here we are going to have the balance down 5,000 and that 5,000 is a debit balance. So if you look at it, if you don't write this down, you quickly jump into it. 25 debit is that for the 5,000 is what? Debit. So final one, the natural balance for capital account is a credit balance. And I think that is the end of this class. So I want to appreciate everyone that have been part of the class. And please, I want you to watch the video as many times as you could, and then we'll be meeting in the proper class. This is a video which you will not be able to, or you to ask any question, but you can come and check me in my office, which we have agreed that will be meeting 1 hour. If there's anything you don't understand, I'll get to look at it. Thank you very much and God bless. Thank you. Thank you. Thank you, everyone. See you.